In Forex trading, the triangle pattern is a common technical analysis pattern that signifies a period of consolidation and indicates potential future price movement. It is called a triangle pattern due to the way the price action forms a shape resembling a triangle on the chart. Triangle patterns can be either bullish or bearish, and they are categorized into three main types: ascending triangles, descending triangles, and symmetrical triangles. Ascending triangle. An ascending triangle forms when there is a horizontal resistance level and an upward sloping trendline connecting higher lows. This pattern suggests that buyers are becoming more aggressive and are consistently pushing the price higher. As the price approaches the resistance level, a breakout to the upside could signal a continuation of the uptrend. Descending triangle. A descending triangle forms when there is a horizontal support level and a downward sloping trendline connecting lower highs. This pattern suggests that sellers are becoming more aggressive and are consistently pushing the price lower. As the price approaches the support level, a breakout to the downside could signal a continuation of the downtrend. Symmetrical triangle. A symmetrical triangle forms when the price converges between a downward sloping trendline and an upward sloping trendline. The two trendlines meet at a point, forming a triangle. This pattern indicates indecision in the market, with both buyers and sellers vying for control. The price is squeezed into a narrowing range, and a breakout in either direction, up or down, could signal a significant price movement. Interpreting triangle patterns. 1. The key trading opportunity with triangle patterns lies in the breakout. Traders look for a decisive price movement beyond one of the trendlines, accompanied by higher volume, as a potential confirmation of the pattern's continuation or reversal. 2. An increase in trading volume during the breakout adds weight to the validity of the pattern. 3. Traders often use the height of the triangle's widest point to estimate the potential price movement after the breakout. 4. The longer the triangle pattern forms, the more significant the potential breakout can be. It's important to note that not all triangle patterns result in successful breakouts, and false breakouts can occur. Traders should use triangle patterns in conjunction with other technical indicators and consider the overall market context to increase the accuracy of their trading decisions. The question arises, how can we identify triangle patterns? The process is straightforward. For instance, on the D1 timeframe, you can identify two consecutive candles where the second one is enclosed within the bounds of the previous one. Refer to the video to observe how we spot and outline a rectangle on a shorter timeframe.
Are you a trader? Aren't you profitable yet? Do you need a free economic calendar? In MetaTrader 4, go to Market tab and search for Porsage. You can use Porsage News utility for free.
We express our gratitude for your attention. Porsage Forex Academy ensures weekly Forex and crypto analysis and forecast to keep you updated. Optimize your trading decisions with our daily Forex and crypto signals. Support us by liking, commenting, and subscribing to receive our profitable signals and insightful analysis.